excited that all of our brokers could join us today for the first installment. We do 4 of these a year, broker Zooms, to bring all of our state brokers up to speed on key and critical issues that the real estate industry is facing and that all of you are facing with your agents, in hopes of taking away some information from these meetings to be able to be more effective and be more profitable and understand some of the issues in more depth as it relates to the real estate industry. I'm happy to introduce here first Carrie Coughlin, who is a Louisiana broker from the Alexandria area. She is the Louisiana Broker Engagement Council Chair for Louisiana in conduit with the National Association of Realtors. So I want to introduce Carrie, and she's going to introduce our presenters today. And we've got a great lineup of speakers with the great topics as well. So Carrie, you want to take it away?
Thank you, Norman. Good afternoon, everyone, and thank you for all joining us today. It is a pleasure to welcome you to our first broker session for the Louisiana Realtors this year. I'm honored to represent Louisiana Realtors this year on the NAR Broker Engagement Council, like Norman had said. First, I want to extend my gratitude to each of you for taking the time to be here. Your engagement and commitment to staying informed on the latest issues impacting our industry are what drive our profession forward. As brokers and office managers, you play a crucial role in shaping the real estate landscape, and these quarterly sessions are designed to support you in that mission. I encourage you to invite other brokers and office managers to join us for future sessions. These are recorded also. These gatherings provide a vital opportunity to hear about key industry updates, gain valuable insights, and get your questions answered by experts. As the leading resource and advocate for realtors, Louisiana Realtors is committed to ensuring you receive timely and accurate information that will help you, your agents, and your clients succeed. So each session, we will cover different topics and presenters covering the latest trends and challenges and opportunities in real estate, like we discussed. And we want to hear from you. If you have any ideas or sessions or suggestions for future discussions, please don't hesitate to share them with us. You can always email info@louisianarealtors.org. That's LArealtors.org. With that, I'm excited to introduce our first speaker. He's Mr. Ron Henderson with the Louisiana Department of Insurance. He will be giving us an update on property insurance in Louisiana. He serves as the Deputy Commissioner at the Office of Consumer Advocacy and Diversity for the Louisiana Department of Insurance, where he oversees the Senior Health Insurance Information Program, benefiting over 70,000 Medicare beneficiaries across Louisiana. With a career spanning more than 27 years in the insurance industry, Mr. Henderson's expertise is grounded in insurance, compliance, government regulations, and consumer education. Ron graduated from Southern University Law Center in Baton Rouge, Louisiana in 1999 and was admitted to practice law in April of 2000. He holds a Bachelor of Science degree in Criminal Justice from Southern University at New Orleans. And currently, Ron contributes as an adjunct professor teacher insurance at the Southern University School of Business and serves as an adjunct law professor teaching insurance law at Paul M. Hebert School of Law at LSU. Mr. Henderson's professional journey underscores his commitment to enhancing consumer advocacy, advancing insurance education, and ensuring compliance within the insurance sector. His multifaceted role in academia and government regulatory oversight highlights his dedication to the field and his ongoing contributions to both education and public service in Louisiana. So please join me in welcoming Mr. Ron Henderson.
Thank you, guys. Can you hear me?
Yes.
I really appreciate it. That's a whole mouthful. I'm going to have to cut that down a bit. It goes on way too long. I appreciate you guys having me today. Look, it is wonderful to be here. I know you guys are really anxious to hear about what's going on in the market. We're about to go into a session, a new legislative session. So we're looking to make some more changes. But I'm going to tell you that we're starting to look up, right? We're seeing better companies coming in. We have 10 new companies that just joined our market. The exciting part that we're seeing also is the rate increases that we were seeing back in 2023 are not happening anymore. We're kind of leveling off. If we look at the statewide homeowners line impact for 2024, it was right at about 6.2% increases. Now that was actually it was up. It was down to 6.6. which in 2023 and 2022, it was a 14 and 16.2%. So the rate increases are now leveling off. Instead of being 14, 15% or double digit, now it's at 6.6%. Commercial multi-line was as down is a plus 3%, where back in 2023 and 2022, it was 6.7 and 3.9%. So we're starting to see a level, right? We start to see more companies are asking us for they're filing fewer rate increase filings because in 2024 we saw about 50 rate increase requests down from 80 in 2023 and 75 in 2022, right? And the first 2 months of 2025, we have 17 approved rate decreases, which we hadn't seen in a very long time. The legislative session will focus this year on a lot of auto insurance and legal reforms that I think we really, really need. The commissioner is really pushing that. At this point, we have about 30 bills that the commissioner is going to pursue. We have to bring some prosperity back and get the companies in here and get, for lack of a better word, our lawyers out of our pockets, because that's what's happening. We are seeing it. We are at this moment the highest in rate premiums in the country, not per capita, by pure number, by about $600 per year. That's a big number for little Louisiana. So we got to get those rates in check. And I think the commissioner thinks the best way is to get some of the lawyers out of the pockets, and let's try to move on and have a good a good market. Now, we just had our legislative auditors just did a report on our fortified homes program. We've already issued about I think it was 1,250. Actually, it was 2,400 grants went out already, and people are, and that's where the roofs have already been put on. We're seeing a rate savings of about $1,250 per year, about 22% on the wind and hail portion of the insurance policy. It is a great program. We just did our last round back in this March. So February, and commissioner did 1,200 was the number. It's now instead of being a first come first serve, it is a lottery system, and on top of that, it was just for coastal properties. We looked at it, and what we saw was the way Alabama did it. They did the coastal properties first, where it was much needed. If we continue to see fortified homes being built and fortified roofs being put on in those coastal areas, we will start to see a communal decrease in the rates. We need about 20% saturation to see a good rate decrease. The reinsurers are looking at that, and they want to make sure that we are doing what's necessary to fortify those homes and make it better for people to live there. And the thought is, if we keep the roof on, you keep the floors dry, you keep the sheetrock dry, you keep the appliances dry. The person can live in their home while it's being repaired if they lose whatever shingles or siding or whatever. That's the difference between a $15,000 to $35,000 claim, which the insurance companies will pay rather easily, or having a $150,000 to $250,000 claim. It is a huge, huge savings. And when someone can live at home while their home's being repaired, we get rid of the unnecessary stress that you place on people when they have to be out of their homes. They have to live in a hotel or whatever else. I mean, it is a big issue. I can tell you right now from personal experience, we're seeing homes on the Alabama coast, which Alabama pioneered this. The homes on the Alabama coast are 500 yards from the water. They're seeing prices that are probably 10% or 15% less than what we see here in Baton Rouge, which is outstanding. So we can get there. I think it's going to be, we're going to see more companies want to come in and do business here. All of this stuff that the commissioner has done and what he's pushed forward, is to make sure that we're competitive in the market. We're definitely competing with Alabama and Mississippi, not so much Texas and Florida. They're much bigger states. They have much more capital, and it's easier for them to recover. They're in a whole different stratosphere. I mean, if you look at Florida, they're the 16th largest economy in the entire world. So we are looking at trying to make it a better option for companies who want to put their capital here. When they write business in Louisiana, they're putting their capital on the line because as we saw after Laura Delta Zeta Ida, which those four storms that hit back in 1920, it devastated our market. Along with the 15 companies that went under, we still lost another 35 companies, right? And that's been the biggest issue. We lost so many companies that the little companies that we had left over really were struggling to maintain. And then most of those policies got moved over to Citizens, which is, again, another issue. And as I tell people all the time, when Citizens has an issue, we, the people in this on this call, the people in Louisiana, we are all citizens, right? Citizens can't pay his bill, we get that citizens assessment on our insurance bill. Everybody has it, everybody has seen it. The good news is this year, if you're renewing, you're gonna see it, but it's gonna say 0-0 because we're gonna pay those bonds off next year, and they had enough money in the fund in order to pay it for everybody this year. So that's a great plus for us here in Louisiana. We had some storm damage in the last hurricane. It was not very much, which we all kept our fingers crossed. And believe me, I held my breath for a couple hours going, please, 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 I don't need another big time hurricane to have a problem. I think it was Francine. So we are looking at a better market. The 2024 property reform bills that went in effect in August and in January 1 of this year, 2025. We got rid of the 3-year rule. I know people thought it was going to be a bad thing to get rid of the 3-year rule, which allowed companies, insurers who had properties for 3 years or more on their books, didn't allow them to get rid of that book of business. However, that rule went into effect January 1. We have not had one company come to us and say, here's our plan to get rid of all of this book of business. And because they can't just do it, they have to file a plan with us. So we're not seeing that dynamic right now. We've increased speed to market. We went from a filing use to a prior approval state, but it still allows us to take a look at those rates and make sure that the companies are actually charging a fair rate. It is imperative that we still have that ability to look and make sure that if those companies are not filing a proper rate, that they refund that money if they have placed that burden upon citizens when it is not expected. All right. We got rid of the sunset for fortified homes. And speaking of fortified homes, again, commissioners looking for a steady source of income so that we can continue to fortify homes in the area, which includes many of the areas you guys live in: coastal Louisiana, Orleans, Jefferson, Tammany, Terrebonne, Calcasieu, all those coastal areas. I think it's 26 of them that we're looking at right now. And if we continue this program, I think that it's going to yield the effect that we need. And the exciting thing that we're seeing is, we did about 2,400 roofs. We've seen at least 5,200 roofs done by people themselves. So for you guys as brokers, real estate, that's a selling feature for you. You have someone who wants to sell a house that has a fortified roof, you know that that insurance is going to be just a little bit cheaper. It is a great selling point. It's something that you guys can use to sell that house more readily, and to make sure that that your consumers can say, hey, look, I bought a house from this realtor that made sure it was a fortified roof. It's something that we can push forward, right? Making sure that thing is something that we broadcast out to the greater population. So, as you guys know, Louisiana Department of Insurance is a self-funded entity. We're asking that the legislature allow us to keep some of that funding so that we can forward this program and make it more readily available. It is an up to $10,000 grant which means it doesn't cover the entirety of a roof, but it gives up at least $10,000 to fortify the roof. And you have to do it the right way. If you're in Louisiana's program, there are certain things that has to be in there. You have to have a water barrier. You have to have drip edges, nailing patterns. All of the contractors have to be in our program. We have to know who they are. They have to be licensed, bonded. The guys who go out and do the inspections, they have to be licensed, bonded, and they have to be in our program. We have to know who they are because it's basically our money, right? So right now, the commissioner is gearing up for session. One of the great things we did last year is that 2023, the statewide building code went into effect. One of the things the commissioner wants to make sure happens is those building codes need to be enforced. We want to make sure that those people who go out are prepared to do that job and they are certified to enforce those building codes. If what we're not seeing here in Louisiana as opposed to Alabama, Mississippi, and God, I say that, it rolls off my tongue, you know, we're behind Alabama and Mississippi on this. Scares me. No disrespect if you're from Alabama, Mississippi. You guys did it right, and now we're following you. You have to build it to standard. They inspect it to standard, and if you don't build it to standard in those places, that house is not certified. You can't live in it, can't sell it. So we have to do the same thing here. We have to make sure that we are going out, inspecting those homes, have certified inspectors who've been trained to do the job the way it's supposed to be done. And when we get an inspection that says, okay, this house is 100%, that house can be sold, it can be transferred, and people can live in that home. And that's going to show the insurers, the broader insurers, the reinsurance market, that Louisiana means business. And we're a good place to do business. The good thing that we had after Hurricane Ida is we had $24 billion worth of new roofs put on. If you have clients that had a new roof put on and they want to sell their house, have them get a wind mitigation survey. You don't have to get the fortified roof to get some sort of savings. If you get that wind mitigation survey, it is transferable to the new buyer. And they will continue to get the discount that comes with a wind mitigation survey. The difference is wind mitigation survey is not a guaranteed savings. If someone didn't put the roof on right, there's a checkbox, a checklist. That list is promulgated by the Department of Insurance. Insurance companies cannot change it. So there's no shortcutting. If someone gets a wind mitigation survey, they're going to get it. If they've checked off all the correct boxes, everything works out, they have to give you a credit, right? That's another selling tool for you guys when you have someone with a roof that's, say, 3 to 5 years old already. That was put on after Hurricane Ida. There are things that we want to make sure that people understand. If we can get those things out into the universe, and we already have people calling us right now going, well, what about that wind mitigation? We're hearing about it. We want you guys to impress that upon your potential clients, especially the ones who you're selling for. Hey, did you guys get a wind mitigation survey? You may have savings there, and you can transfer that onto your new buyer. All right. We're going to continue to work hard for the people of Louisiana. The commissioner is very bullish on getting out there. If you haven't seen him, he's been around the state continuously. I mean, the guy's been going nonstop for the past year. It's been amazing. So I can't call in sick. I just have to go with the flow. If he wants to go, I got to go. You know, we're working with the licensing board, the contractors licensing board, to ensure that all the stakeholders are brought to the table. We're going to do it's called a property insurance task force. We want to bring the realtors in. We want to bring in the mortgage companies. We want to bring in the banks, along with the contractors and agents and brokers and whoever, because we need the right type of people at the table. And the commissioner has been saying this for the past few months. We don't need to do things the way we did them before. We need fresh ideas. We need people who want to come in and contribute so that we can have a better market. And as we continue to get a better market, as we continue to have these great ideas brought to the table, all of them won't be taken in, we will get a better market. We're slowly starting to see that change, that turn. We again, lower rates, lower increases, then now some rate decreases. We've had more this year than we had for the past 3 years. And it's going to get better. Let's all keep our fingers crossed and pray that we don't have a major hurricane. All right. Because we want to continue this momentum and continue building on the success that we have now. Commissioner Temple is very bright. He really understands this market. He comes from the industry. He understands it, and he wants to continue building on the success. The thing that I will ask you to do for me as business people, as homeowners yourselves, you need to talk to your legislators and ask them to vote for some of these proposals. Let them know what you think is a good idea. Also let them know what you think is not a good idea. I mean, if your voice isn't heard, then there's some people over there are going to make a decision for you, and you're not going to have any say-so in what goes on. So your association, this association, which is a great association, your broader associations, you guys need to be at the table and have the legislators understand that you need them to vote for the bills that are going to make good sense for you as business people and as citizens of Louisiana, the people who live here in the state. Because the thing that scares me right now is I have a daughter who's in law school, and all she talks about is leaving. She's like, Dad, I'm going to leave. And I really don't want her to leave. And the reason why she's leaving is not because I don't think she can make good money here. It's just like, insurance is going to be terrible. And you're going to kick me off your insurance. You told me that already, as soon as I get a job. And I'm like, yep, you got to go. And she says, you're not going to put insurance on my house if I buy a house. Nope, that's your responsibility. I pay for everything else. So it is imperative that we keep our young, bright minds here. If we give them the opportunity to stay here, they will continue to build a better Louisiana. And if you guys have any questions, please don't hesitate to ask. I am open for whatever questions you have. Thank you guys for listening to me drone on for a good 25 minutes. Anything if I don't know the answer, I will get back to you. But if you have a question, please ask me.
Anybody? If you'll just unmute and ask your question, if you have one of Ron. Anyone? Well, Ron, keep up the good work. We're going to support those bills that, make it attractive to companies wanting to come back here and do business. And obviously those companies that are in the state, we want them to expand their coverages as well. And we need to get that funding permanent for the fortified roof program as well.
Yeah. Please support. And, if you have any questions for the commissioner, reach out to him. He's very responsive. He will call you back. He will come to your meetings. He will do everything that's possible to get the message out. So thank you guys so much for tolerating me for this little bit of time. And if you guys come up with any questions later, don't hesitate to reach out to me. My email address is ron.henderson@ldi.la.gov. Lori Whip has it. Please share it with the group, Lori, whenever you need to, if they have any questions. And if you want to do other meetings with my office, you want someone to come to your office and talk about insurance, we are available to do that too. So don't hesitate to reach out. Thank you guys for listening, and y'all have a great rest of your afternoon.
Thank you, Ron. Really appreciate it.
Thank you.
And I didn't hear anybody have questions or any hands up. So we're going to go ahead and introduce our next speaker, Dr. Jessica Lautz, and I hope I'm saying your name right. She's the Deputy Chief Economist and Vice President of Research at the National Association of Realtors. She has been with NAR since 2007. The core of her research focuses on analyzing trends for both NAR members and housing consumers. She is in demand as a speaker and by major media outlets to provide commentary on the real estate market. She has testified before Congress on behalf of NAR. She also volunteers at Nottingham Trent University as an industry fellow mentoring real estate graduate students. She is a committee chair at the National Association of Business Economics. She bakes birthday cakes for underserved youth with Cake for Kids and sits on the board of the Food Recovery Network. She has been recognized by Housing Wire's Women of Influence and Riz Media's Newsmaker Award. Jessica received her doctorate of real estate from Nottingham Trent University in the United Kingdom. She also holds a master's in public policy from American University and undergraduate degrees in political science and law and justice from Central Washington University. Please join me in welcoming Dr. Jessica Lautz. And did I murder your name?
You're fine. You're totally good. I normally say it's louts like shouts, but I promise not to shout at you. So, but I think that's just for fun, really. So okay, I'm gonna jump in. I have a lot of data in here, but I sent my slides along, so you'll have access to all of this data as well. You can grab all the resources. There are citations on the bottom of the slides. So if you want to grab anything from here, you certainly can. And honestly, this is all an NAR member benefit, is the research that we have. So this is your research to do what you want to do with. So let me jump in. Looking at the real estate market overall, I will say we're on better footing right now than we had been ending 2024. We know actually for the last 2 years, home sales activity had been quite down. And the last time home sales volume was really matching that level was back in 1995. That's a long time ago. I'm an elderly millennial. That's what the media has termed us. And as an elderly millennial, I tend to think that 1995 was yesterday. It turns out it wasn't. And we actually have 75 million more people in this country than we did in 1995. So just to put things into perspective, that the home sales volume should not be matching that level. So what's the problem? Well, I think we all know it's home prices, it's affordability, it's interest rates, it's the lack of inventory. And in fact, we had less inventory ending the year than we did in 1995 at the same time. So that's a problem. Inventory in the last few months has been coming up. We do have January and February data at this point. We are seeing an uptick, but I'll show you that data too. It's not all rosy as we're looking at this. We have a ways to go when we look at the inventory crisis. But let's take a look at mortgage interest rates. Everyone wants to know what the expectation is for mortgage interest rates. I will say that our forecast for mortgage interest rates is actually about where they are. They're in the mid sixes. They've been hovering around 6.7%, and really not much movement there for several weeks. That's our expectation, is that mortgage interest rate are going to be in the mid sixes. So on one side, total bummer, because there's a lot of folks who are in their home who have no intention of leaving because they're in low interest rate mortgages. But on the flip side of that, if someone's saying, I don't know, maybe I should wait to purchase a home when interest rates drop, there is no expectation of that. So there's really no point in waiting on the sidelines for that when there really is no expectation. When we look at home prices, we're just seeing them go up. I tried to pull a couple metro areas from your state here so that you could see some comparisons on a local level, but you all are the local experts. You know your local zip code data, your street data, way better than I would ever fathom to know. But what I can see here is that home prices are trending up within your areas too, especially in New Orleans on a year-over-year basis, a 9% increase. That's outpacing the national increases in home prices right now. On a national level, we're seeing home prices increase about 3.5%. So you can see that's very much outpacing them. One of the things I want, though, for your takeaway to be is that we used to see that new homes would be more expensive than existing properties. We're actually seeing that gap has shrunk. We're seeing that because of the ongoing bidding wars for existing homes, that home prices just keep moving up on a national basis. The other thing that we're seeing here is rapid home price appreciation. So within your state, if we look, what we can see here is that you've actually seen a 24% increase in home prices in the last few years. So really knowing that housing equity is being gained by consumers today. The qualifying income for home buyers, though, just keeps going up as well. So if we make that 1995 to today comparison, what we would see is that On a national scale, you would need an inflation adjusted $66,000 to be able to purchase the typical home. Right now, you need over $100,000 to purchase the typical home. And that's with 20% down, which is quite unusual. We know that the typical first-time home buyer certainly would not be putting 20% down. Even if we were to inflation adjust those incomes in your local areas, I am certain that that is really not matching what consumers' expectations are when we look at the housing market today. The next thing that we're seeing is that because of the rise in mortgage interest rates, because the continual rise in home prices and the bidding wars that have continued to happen, what we've seen is that household income has just continued to increase as well. So it has jumped by $26,000 for the typical first-time home buyer in just 2 years. That is really not matching what U.S. incomes are jumping in 2 years. So it has really increased. We're really removing from the housing market today, unfortunately, school teachers, first responders who we desperately need in our local communities, and yet they are being priced out of living in our local communities. So inventory, I alluded to this earlier. We are seeing it come up, but one of the things that I think is quite important to note here is that inventory, even though it's coming up, is still not even at the level of February of 2020. And so if you remember back at that time period, we knew that we had an inventory crisis then. We knew we did not have enough inventory. But then when the pandemic hit, interest rates dropped down, home building activity contracted, we suddenly had significantly less inventory in the market. And now for years, we have been saying these are historic lows. So even though we're coming out of that, we really have a way to go before we have enough housing inventory in the market. On a nationwide scale, we estimate we're short about 5 million units. So quite a ways to go to get us out of there. Now, on the flip side of all of this, I've talked about all of the bad things. One of the things that we are seeing here is a lot of all cash home buyers. So when we look at repeat buyers in the market, it's nearly a third of all repeat buyers. Yesterday, we just released our annual generational trends report. When we look at that report, one of the things that's really fascinating is that baby boomers are the biggest generation of home buyers today, even though they're not the biggest generation. I'll show you that data in a second here, but I think what's really interesting is that when we look at those home buyers, they very likely are paying cash for that home. So they're not only the biggest generation of buyers, they're just putting down a stack of cash and not even financing that home purchase. So it really is a very different housing market than what we would have seen just a few years ago. You can see that housing equity gains really benefiting current homeowners today. What I want to pull out for you, though, is that 1 in 10 first-time home buyers are paying all cash. And we can see this trend as well among down payments. Down payments have been trending up. In fact, they're at the highest level than we've seen really in the last 20 years. And as we look at these, you may wonder why and how that first-time home buyer is doing so. Well, one, they have a higher household income, but they also are a very different type of first-time home buyer. They're more likely to have financial assets like stocks, cryptocurrency, bonds, and they're taking those financial assets and they're actually putting them towards a home. The other thing that we're seeing here too is the Bank of Mom and Dad is a really good bank if you have one of those around who can give you that generational transfer of wealth. We're also seeing inheritances are ticking up. It's still low single digits, but we are seeing that tick up as well. I want to give you some also data here on migration flow. So this is population gain. So this is not necessarily just seeing moves, but just pure population gain as well. So thinking about births going up, thinking about people moving into your state, it's all of those factors. So when we look at this, what we can see is that we have nearly 9,700 people who have actually come into your state 2024 in comparison to 2023. So there is a gain in population there. Not as strong as some areas, but we are seeing a gain. The other thing that we are seeing as well in your state is that job gains also turning positive. So this had been actually in the orange, matching closely to Hawaii, but actually in the last month seeing some positive gains in jobs outpacing March of 2020. So making that comparison to the pandemic time period, now seeing y'all in blues, that's good news as well. As we look at migration flow, one of the things that I think a lot of people wonder is where are people moving to? Suburbs and small towns are still the most popular places to move to, though we have seen a rebound in city centers. That's really happened in the last year. It's now at a 10-year high. What's important about that is to wonder who's moving there. We are seeing that young adults are moving back to city centers. I would expect that that could actually accelerate as we see return to work orders. The idea of working remote 5 days a week, long gone at this point. But we know that flexibility of that hybrid schedule is also being reduced. And a lot of employers are saying, nope, 5 days a week, you have to come in. So as we see those badge swipes increase, we could actually see city center moves also increase here as well. I want to give you some demographic changes here. We are seeing a drop in first-time homebuyers overall. This is the lowest level that we've seen in more than 40 years of history of this data here. It's at 24% of the market. Healthy market, we'd actually see 40% of the market was first-time homebuyers. So really seeing a drop here. I mentioned that I was going to talk about generations. This is where I think it gets really interesting here. So if we look at this generational chart, this is everyone in the US today. So we've got little kiddos born in the last couple of years in the orangish color, peachish color. As the bars get shorter in the silent generation, y'all are from Louisiana. So I think that people become ghosts or they go to heaven. I think that tracks well with your state. So we'll just go with that. I love a good ghost tour. So as we're looking at this chart, what we can see here is that in the blue is the millennial generation. It's the largest generation in the US. And as we look at that millennial generation, really important things to pull out here. So there's 86 million, nearly 86 million millennials in the US versus 64 million baby boomers. So why is that important? Well, when we see that baby boomers are that biggest generation of home buyers, we really know that cash is king. Housing equity is king. People are really moving in retirement to where they want to be. And largely that is following the grandbaby. It is not necessarily downsizing. If we look in the millennial generation, you can see a red bar. It's not a typo. It's the median age of today's first-time home buyer. That's 38 years old. So historically, we had seen a first-time home buyer at 28. We now see that they are 38 years old. So that is 10 years of lost housing wealth gains that they may have had. It also means that perhaps one less move on the table that they could have in their lifetime as well. So it's really a different type of first-time home buyer today. On the positive of all of this, I want to pull out that there is a population boom you can see a little bump in that data in the late 20s, early 30s. Those young adults putting a lot of pressure into the rental market today and a lot of pressure into the housing market, trying to purchase their first home. So when we look at the housing crisis that we have, the inventory crisis that we have, we can really see this pressure is being put on that by young adults today. If we want to do the generational blame game, though, we want to blame young adults, we certainly can. But I also want to give the blame to boomers because as we look at that second red bar, 61 years old is the median age of a repeat buyer today. It used to be decades ago that the typical age of a repeat buyer was 36 years old. That's actually younger than today's repeat buyer or first-time home buyer. So you can see this massive shift in the housing market today among these two really big generations surrounding Gen Xers. Gen Xers are a quarter of the home buying market overall. They're very steady in the home buying market. One of the big findings that we had yesterday actually was that among Gen Xers, this is crazy. 21% of them, more than 1 in 5 Gen Xers, purchased a multi-generational home. They are in the peak of their earning career. They're buying the biggest homes. They have to because they are taking care of aging parents. They're taking care of kids over the age of 18. They're taking care of kids under the age of 18. Everyone's moving into their home. So putting this financial pressure onto this Gen X buyer that we're seeing in the market today. Really fascinating finding. That's as high as we've ever seen that number. So thinking about the sandwich generation, it used to be boomers. Well, now it's Gen Xers for sure. As we look at this data, 17% of all home buyers are multi-generational buyers. So really seeing that trend tick up here as well, that financial pressure being put on families to purchase a home really being had here. The other thing that we're seeing is with a shift in marriage rates. We know that half of Americans are married today. That's really a drop from the 1960s, where we used to see 70% of Americans were married. So really a big shift there. As we look at this, I'm showing you first-time home buyers in this chart. I could show you any generation. I'm going to show you the exact same trend, but it's really pronounced among first-time home buyers. That's why I think it's really interesting. We can see that half of first-time home buyers are married today. Really big drop from 75% back in 1985. Among single women, we can see a huge gain here. So single women really outpacing unmarried couples and single men in the housing market. So really outpacing both of those groups. We have seen a growth in unmarried couples, and we're also seeing a growth in roommates purchasing homes. Single women, I think they're fascinating. They're doing so on the lowest household incomes, but she's out there outperforming. We can also see a drop in home buyers who have a child under the age of 18. This shouldn't be a surprise, honestly, from the data I just showed you, because we see this huge gain in repeat buyers, and we also see a huge gain in their age. So they could have kids, but those kids are probably out of the household at this point. We also know that childcare costs are a major hurdle to saving for a home. So as we think about someone who has kids having this hurdle of childcare costs, well, perhaps young parents are being shut out of the housing market. I hate to put it that way, but I think unfortunately that could be one of the things we're seeing here, is that it's really hard to save for a down payment if you're paying for rent, your own student loan debt, childcare costs, so on and so on, all in an inflationary environment. That's quite difficult to do. Much later note, perhaps a little happier, is just the influence of pets. We're seeing this continue to grow. $147 billion business in the US with a B. That is tremendous. A lot of buyers factoring in their pets, especially for young buyers, especially for single women, unmarried couples. This is a really big driver of where they want to go and their homeownership decisions. I want to give you a few slides here on the agent role. I'm going to give you a challenge. Please brag about yourself. I know it's uncomfortable to do. You heard I made birthday cakes for kiddos who are in shelters and DV shelters, domestic violence shelters. They are super ugly. They're not pretty cakes. They taste really good, and my husband likes it because it's side cake day, and he gets like his own little, like, there's always leftovers, right? Especially because I'm not good like at baking. But I will say that they taste really good, and that's a really awkward thing to brag about, but y'all volunteer way more than I do. 70% of all realtors volunteer in their local communities. You are so invested in your local communities. You're giving 8 hours of your month to your local communities, so do brag about it. It's such a good story to tell, and it's such a positive story to put out there. And when we look at this, we also know that buyers are using agents at really high rates. Nearly 90% of buyers are using agents. It's not just to find the right home, it's help with negotiation, it's help to guide them through that process. They need your assistance in that home buying process. On the selling side, 90% of sellers using an agent. For sale by owner, FSBOs at all-time lows, just 6% in the last year. Sellers want help pricing their home correctly, really having a competitive offer, help with marketing, finding that qualified buyer to their home. All of these incredibly important to today's sellers. The last two slides I want to give you here are that the net worth of homeowners just keeps rising. And we really do see this divide in homeownership, this really bifurcated market when we think about those struggling to get in versus homeowners who continue to build this wealth. We're continuing to see it here. And so as we look at this, $430,000 held in net worth by owners versus just $10,000 by renters. That's staggering when we look at the environment today in the economy. And the last thing I'll give you here too is that real estate is incredibly important into your local communities. We know that for every home that's actually sold, you are adding $85,000 into your local communities. It is very important. There's a huge multiplier effect when we look at real estate, just thinking about all of the jobs and professions that are impacted, from painters to mortgage bankers to really getting that family into the home. So truly thank you for what you do, because that is a big multiplier effect. And with that, I will encourage you to follow us on social media. We're putting out a ton of information, infographics, articles, instant reactions that you can share with your clients, make you the smartest person in the room. So I would encourage you to follow us on social media if you're not already. And with that, I will turn it back over. Thank you.
Does anybody have questions of Jessica? Just unmute and certainly you can ask your questions. And we're going to share all this information with you as well. Any follow-up for Jessica? All right. Thank you, Jessica. We certainly appreciate all the great work you do at the national level for all the realtors and particularly for our brokers and agents and members in Louisiana.
Thank you.
Thanks, Jessica. Our next speaker is Mr. Ron Osborne. He is the agency president for RISC, which is the Rice Insurance Service Center. He has 2 decades of insurance industry experience. He is a licensed attorney in the state of Kentucky. Ron began his insurance career at RISC, where he spent over 6 years as a senior claims counsel. He has served in a number of leadership roles with other insurance service companies, including as general counsel. He worked his way up to president at the leading intellectual property insurance company, where he led their claims, legal, administrative, marketing, and sales departments and oversaw all the aspects of the company. Ron became agency president in 2023. Please join me in welcoming Ron Osborne.
All right. Thank you, Carrie. I appreciate that. And after following Ron and Jessica, it sounds like I need to get out and do more with my CV and actually try harder in life. But no, we appreciate the opportunity to be here. Talk about everybody's favorite subject, errors and omissions insurance. I know you woke up this morning and you couldn't wait for this meeting just to talk about insurance. But just a little bit of background. Again, I'm agency president here at Rice Insurance Services Center. The Rice family has been involved in real estate errors and omissions insurance since 1989. Currently, we administer group E&O programs in 15 states where the insurance is mandatory. We call these the mandated states. That includes Louisiana. So we have a contract with the Louisiana Real Estate Commission to issue policies to active individual real estate licensees and firm licensees who pay the applicable premium. We currently partner with a company called Continental Casualty Company. They are a CNA company rated A Excellent by AM Best. We've been with them about 23 years now. So it's a good partnership for us. So Rice is the program administrator. We administrate the group programs to all 15 states that require the E&O insurance, and Continental Casualty is our carrier. They write the policies while Risk sells the policies and administers the claims. We have an in-house claims staff here made up about 10 to 12 attorneys. Just depends on the time. We also have paralegals, and each year we do approximately 1,500 new claims. Includes about 100 to 130 in Louisiana each year, but the 1,500 we do across the country. So we see a variety of claims. The claim types include incidents, subpoenas, regulatory complaints, and litigation claims. Some of those claim files are open and close within a few months. Others take years. So when they get into the litigation, it just depends on how fast the courts move. Some states move faster than others. Some states move really fast, but we're with that. So once the claim's open, we're there through resolution. So since 2003, we've handled over 28,700 real estate E&O claims. And also since 2003, Continental Casualty Company has incurred $203.4 million in defense costs and damages resolving those claims. So for some general information, I just want to refer you to our website. It's www.risceo.com. On that website, you'll find the group policy, you'll find endorsements, you'll find some risk management techniques, but I want to make sure that's available anytime. And also feel free to call us anytime. Our contact number readily available. Be on the website. We'd love to hear from you. That's what we're here for. We're here to serve that group program. We want to continue the success of that group program. So what is errors and omissions insurance? It's also referred to as E&O insurance. Basically, it's malpractice or professional liability insurance. It's professional liability insurance for real estate licensees is coverage that insures the licensees for claims alleging they committed a negligent act, error, or omission in the performance of their professional service. Key word there is alleging. We have defended claims that are frivolous. We have defended claims that have merit. So to us, as long as there's an allegation of a negligent act, error, or omission, that's what triggers that claim. So even if it's frivolous. So what does it cover? The two primary aspects of the E&O policy, the most important aspects that we cover are defense cost coverage. Attorney's fees can add up really quickly. Even if you have a frivolous claim, it can take tens of thousands of dollars to win that claim, go through litigation, either get it resolved, settled, or dismissed. So defense costs are in addition to the policy limits. That's one thing that we want to highlight. You have $100,000 per claim coverage on your policy, but those defense costs will be in addition to that. They do not erode that policy limit. So that is a huge advantage of these errors and omissions insurance policies. The second damage is just regular compensatory damages, settlement payments, court awards, judgments. So those are the two main points of coverage for that. I think the most important, and you'll hear Christine here in a few minutes, she'll talk about some claims, she'll talk about some risk management techniques, but that defense cost coverage that's in addition to the policy limits, I think that is a key to these policies. So what are the benefits of the insurance policy in the group program? One, it protects you, the insured. That's what we're here for. We have claims that have merit, like I said, and some that are just nuisance, some that are frivolous. When I first came here 20 years ago, started out as a claims attorney, I was amazed at some of the allegations that are leveled at real estate licensees. You get blamed for anything and everything in transactions. Before I came here, before I started working in insurance, had no idea some of the allegations that they come against you from the general public, from your clients. It's just the variety of the allegations. So number one, the first benefit of the EO insurance program is to protect you, the insured. It also protects the public. The payment of the covered damages when an individual is harmed from the negligent act or omission. Innocent mistakes happen. And that's what that policy is there for. One of the other things that kind of surprised me was the just general want for the insured to submit a claim. They felt like they didn't do anything wrong. They want to try to take care of themselves, and they're very reluctant to submit that claim. But once again, if you take anything else away from this today or nothing else away from this, that's what we're here for. Even if you hear a whisper of a claim or, you get served with the demand, let us know immediately so we can get in there and start working with you to get that resolved on your behalf. Now, who can purchase the coverage? Well, these group programs, the master policy is issued to the Real Estate Commission. So we have a contract. The group policy is issued to the Louisiana Real Estate Commission. Anyone with an active real estate license who pays the premium can buy into that group policy. It's a guaranteed issue coverage. It cannot be canceled once it goes into effect, and the coverage is not individually underwritten. So if you have one claim, two claims, three claims, you're still going to be able to buy that policy at the same premiums as others insured in the state. The premium is based on the loss runs in that state, and the premiums apply to all individuals, all firms who purchase that coverage. So there's no detriment to submitting a claim. That's the other thing. People are hesitant because they think their rates are going up, but that's not how these work. This group program, that's the benefit of it. You're going to pay the same rate as everyone else. So again, any individual with an active license is required to have the policy. You can purchase through the group program or purchase similar coverage elsewhere. And firm coverage is also required in Louisiana. We'll go into how does the E&O policy work? And I think this is another main point to take away from today. These real estate E&O policies are claims made and reported policies. So there's two basic types of policies, insurance policies, the claims made and reported and the more traditional occurrence policies. Most people are familiar with those occurrence policies like homeowners or auto insurance. So under an occurrence policy, you submit the claim to the carrier when the loss occurred. So if your house has a fire or you have storm damage, you would submit that to your then current homeowner's insurance the day of that loss. Or if you have an auto accident, you would submit that to your then current auto insurance carrier. Claims made and reported policies are different. You report them to the carrier when you receive the claim. Even though the transaction or the data loss may have been years ago, you would submit that to your current errors and omissions carrier. Now, just a little history regarding claims-made policies. They were developed in the 60s to provide greater actuarial for claims for past errors and omissions, or for errors and omissions claims that might not be reported until well into the future. So at that time, I think it was primarily driven by environmental and asbestos claims. So say a construction worker was working on a job site in 1950, he or she may not exhibit signs or sickness until decades later. The problem with that was if you go back to report that to the occurrence carrier at the time of 1950, they may be out of business. You may face statute of limitations issues. So in the 60s, the insurance industry came up with the claims made and reported policies to try to help the actuarial to limit some of the responsibility for those occurrence carriers at that point, but still provide protection for insureds in the future. So the claims-made policies and the professional liability policies are applied to the professional liabilities because the loss may not be discovered until well after the transaction. So if you're, what we see in claims, you may have closed on a home in 2022, but then the buyer may not discover a potential issue until 2025. So if they submit a claim or make a claim against you, then you would submit that to your 25 carrier. So there's a couple of nuances to the claims made and reported policy. They cover back to what's called the retroactive date, and that is the date from which you have had continuous errors and omissions coverage. So it's important to keep that coverage continuous. If you have a one-day gap in coverage, then anything before that gap would not be covered, any future claims under future policies. So it's always important to keep that continuous coverage. So the 4 dates that you really want to keep in mind with claims made and reported policy: the date the claim is made, the date you report it to the insurance company, again, claims made and reported. You want to be aware of that retroactive date, and you want to ensure that the professional service that's the subject of that claim occurred after that retroactive date. The other question that you might ask is, okay, how long do I have to keep this coverage? So say at the end of 2025, you want to retire or put your license on inactive status. You don't want to keep paying for errors and omissions policies going forward. These policies have what's called extended reporting period coverage that you can purchase. So instead of keeping your license active, purchasing future policies, you can buy an ERP. And in Louisiana, we offer a 1, 2, 3, or 5 year ERP. Please don't ask me why we don't do a 4. That's a mystery to me. But it's 1, 2, 3, or 5. So you can extend that reporting period out for up to 5 years. Most claims that we see occur within the 2 to 3 year period, but that's not to say that we haven't seen some further down the road. But what I would encourage anyone to do, your licensees, that if you think you're going to go inactive, place your license on inactive status, call us before the end of the year. You have 90 days until after the expiration of the then current policy to purchase that ERP. Good thing to have in place, because again, it's going to extend that reporting. That way you don't have to keep your license active and keep purchasing the policies. So what triggers E&O coverage? Well, a claim is triggered when there are 2 things: either a written demand for money or services received by the insured, or the service of a lawsuit or institution or arbitration proceeding, mediation proceeding, seeking damages or alleging a negligent act or omission from the insured arising out of professional services. So there's 5 parts to a claim. First part, there has to be a written demand received by the insured. Now, these insurance policies require something to be in writing, so the allegations are clear. It's not hearsay. You're not passing it on verbally from one person to the next. So if you have someone that's calling you on the phone, making allegations against you, I would just have them put that in writing. The writing can be, request for mediation, arbitration. It could be a demand by email, text, or even skywriting, as long as it's something in writing, or it could be a lawsuit. The second part is the claim has to be a demand for money or services. They have to want something from the insured. Third, they have to seek damages that are covered under the policy, and we'll talk about damages here in a few minutes. And fourth, they have to allege negligence. It's an allegation of negligence that the insured breached some sort of duty that caused a loss. And that negligence has to arise from professional services, which is defined in the policies and includes those services which are required to have a real estate license. So who is insured? The licensee, any active licensee that's paid the premium. Insured also includes the licensee's unlicensed employees, as long as they're under the licensee's supervision and control, such as a personal assistant, clerk, secretary, messenger, intern. It also includes unlicensed employees, or unlicensed employees does not include appraisal trainees or anyone who manages properties on behalf of someone who does not have a real estate license. Insured also includes the licensee's heirs and executors, administrators in case of the licensee's death. We've had that come up in a couple claims. It unfortunately arises frequently, especially when the transactions years ago, the licensee has moved on, passed on. So we have seen a couple of claims where it involves their estates. Licensee also includes spouses, but only if it's arising out of the relationship and jointly held property. There's no coverage for the spouse's independent negligence. And the individual licensee's policy also covers the real estate firm for vicarious liability arising from that licensee's negligent acts, errors, or omissions. So I mentioned the term professional service, the term of art in the policy here. It's services performed by the licensee as a real estate broker or salesperson as defined in Louisiana real estate license law, and for which the licensee is required to have a real estate license. The purpose of these E&O policies is to protect the licensee for their activities as a licensed real estate agent. So professional services also includes property management services in Louisiana, and also the issuance of a broker price opinion. Damages, we mentioned this a little bit earlier. So the policy covers compensatory damages. It does not cover fines or penalties, punitive or exemplary multiplied damages. Those are things that are typically excluded under most insurance policies. And it also does not include anything deemed uninsurable under applicable law. I mentioned earlier that some insureds are reluctant to file a claim. And I was actually kind of amazed that some of them didn't want, because they think it's reputation damage. They can't believe that someone's making a claim against them. But this day and age, anyone can make a claim, whether it's frivolous, whether it has merit or not. So we always encourage you, anytime you have a question, to reach out to us. Let us know, get us involved as soon as you can, so that way we can start working with you. In Louisiana, the insured can report the claim directly to us, and we'll handle the claim process on behalf of the carrier. Continental Casualty actually delegates claim handling authority to us. It's very rare for insurance carriers to do that, but we have a long-standing relationship with them. We've handled the claims for decades. So we have a very trusting relationship. They turn it over to us, which we think is a benefit because we can monitor that group program more closely since we're handling claims as well. So the insured can submit a claim directly to us. And Louisiana, I believe, is one of the only, maybe the only direct action state that we have where a claimant can file a lawsuit against the insured and the insurance company, name the insurance company into that litigation. So again, we always want you to err on the side of reporting. In order to be covered, the claim has to be reported to the carrier. As mentioned before, it does not raise your rates. It's not a black mark on you. We don't report to the commission. We just need you to tell us what's going on so we can get involved. That's what we're here for, to activate that policy. Our claims adjusters here are trained to look for coverage. That's the success of this group program. We want to ensure the success of the program, ensure your success, and protect the public. So our claims adjusters are trained to look for those coverage situations. So it's important to report any actual negligent error that might reasonably be expected to be the basis of the claim, or just in general, anytime you have a question, reach out to us. Your premium's not going to increase. And it doesn't matter to us if you're right or wrong. We're there to help you try to get the situation resolved, because honest mistakes do happen and frivolous claims are frequently made. You'd be amazed at some of the claims that we hear here, some of the things that plaintiffs counsel come up with and expect real estate agents to do. You guys are magicians. They expect you to do everything. So I want to reiterate again, the main two benefits of the policy, the indemnity and the defense costs. Attorneys are expensive. The primary benefit here is getting those defense costs in addition to those policy limits. Christine can probably elaborate on this, but I think most of our costs, most of that $203 million is the defense costs, paying for the attorneys. They can be quite expensive. So I'm going to take a little bit of time here and talk about exclusions, just kind of go through them, and then I'll turn it over to Christine, who's going to talk about some claims, talk about some risk management. Some exclusions exist because there's other insurance policies that cover those incidents, like general liability policy, homeowners insurance, property owners, renters insurance, builders risk, cyber liability, employee dishonesty, theft. There could be multiple policies that apply to a situation. So not only do you want to think about when you get a claim, whether you need to report it to your E&O carrier, but also to any of those other carriers. You know, if you fail to report that, then you may prejudice any coverage that was available under those policies. So always think not only in terms of E&O, but what other policies you have that may be triggered by that situation. Intentional acts are usually, or almost always, excluded from coverage. Anything like fraud, dishonesty, malicious criminal acts, anything where an injury is expected or intended. Our policy does exclude failure to pay, return, or collect commissions, escrow money, security deposit. However, we do have some sublimits in our coverage for escrow claims. I think $5,000 coverage per claim, $10,000 aggregate under escrow claims. Policies exclude wrongful termination, employee disputes, breach of contract, wrongful termination. Bodily injury is usually excluded under E&O policies, physical injury, death, sickness, disease, cancer, emotional injury, such as pain and suffering, emotional distress, mental anguish. Some of the other big ones, unfair competition, IP claims are not covered under EO policies. Theft of photographs from other listing agents, or you're using celebrity images. I'll tell you, I had a claim many years ago in New Mexico where it's Academy Award time, and one of the licensees just innocently used photographs of celebrity in her advertising. She didn't think anything of it. She is in rural New Mexico. Well, LA, they watched that. Their agents were quick. Within a week, they sent her takedown notices and sued her for copyright infringement. So, you have to be careful in that aspect, but IP claims are not covered under EO. Libel, slander, the traditional things such as discrimination are not covered. One of the big things we want to pay attention to is your own personal interest. Most EO policies that we see, including ours, have some sort of exclusion for property that you own. Now, there's subsets, and that's kind of been eased in the last several years, where now you can sell your primary residence or list a residential personal interest or with a personal interest, but you have to follow certain conditions to do that. So I encourage you to read a copy of the policy. There's a copy on the sample policy on our website is the actual policy. Encourage you to read that. If you're selling your own home, call us before you do that so we can walk you through that, just talk about that, because there are some nuances to selling your own property. Just quickly, some other things that are uncovered: Securities Act claims, some state blue sky security laws, and your activities that are not defined as professional services, activities that you're not required to have a real estate license, such as acting as a lawyer. We have many insureds that, they take on the role, well, my husband's a lawyer, or I think I know this, I Googled this, and they're giving legal advice. I encourage you to stay away from that. Activities as a title agent, mortgage banker, broker, correspondent, escrow agent, construction manager, property developer, insurance agent, or even appraiser, if it requires a separate license. Those activities fall outside of professional services. Now, we do offer appraisal endorsement if you're also a real estate licensee and appraiser. So policy also includes some exclusions for environmental claims, pollution, mold, fungi. So I would just encourage you to be generally aware of those exclusions. And if you have any questions, again, encourage you to read through the policy. Have any questions, let us know. We're always happy to help out. That's what we're here for. And again, if you think you hear something, whether it's an incident or whether you received that written demand for money or service, let us know so we can get in there and start helping you from the beginning and work with you. That's what we're here for. So with that, I'd like to go ahead, turn it back to you so we can have Christine jump in and give us some claim examples and give us some other risk management techniques.
Ron, real quick, I wanted to jump in. There was one question, so we don't forget it. What is the approximate cost of that ERP premium you mentioned? I know it probably goes up based on the number of years, but ballpark figure on that cost.
It does. And off the top of my head, so to extend that 1 year, it's the same price as the expiring premium. So basically, you're extending that expiring policy, including all the endorsements, whatever you purchased. So I think the first year is 100% of that premium. 2 years is 150%. And then the rest of it goes down from there. I think the next one for 3 years is 200%. So you do get a discount the further out you go. But, you know, people call and they ask all the time, okay, how many years should I go? Should I just go 1 year or 2 year? You never know with these claims. They usually come within 2 to 3 years of a transaction. I would always err on the side of caution, and not just to sell a higher policy, but truly because you never know how long it's going to take. If you have not done a transaction in years and you're finally giving up your license, then maybe you can go that 1 or 2 years. But if you've been active, you've done recent transactions, you may want to consider extending it out 3 or 5 years.
All right. And we've got 1 or 2 more questions real quick before we get Christine. Can you expand on what you mean by fraud exclusion?
Fraud exclusion, where someone accuses you of fraud. You know, any intentional act is not going to be covered under insurance policies. So when someone accuses you of fraud, it's very rare that they just accuse you of fraud. You know, they when they file a complaint, these attorneys do the shotgun approach. They're going to put any allegation in there that they can possibly come up with and include fraud. So under that situation, as long as you have something to trigger coverage, and they do it under reservation of rights, if it goes to judgment and the court finds that the insured did commit fraud, that would be excluded.
Okay. And the last one is, if you're a dual agent in 2 different states, say Louisiana and Mississippi, can you get endorsements and renew those at the same time?
Yes, you can, and we see this quite a bit. You can get what's called a conformity endorsement on your. So if you're a resident in Louisiana, we encourage you to buy the Louisiana policy, get the conformity endorsement, and we can send that over to Mississippi. In fact, we do that quite a bit. So that way you're not buying 2 policies. So what that conformity endorsement does, it conforms the Louisiana coverage to the terms required by Mississippi. They may have, you know, a little bit different language that they require in their policy, but I think it's a $15 endorsement, maybe $25 endorsement. But you buy the Louisiana policy, you buy that conformity endorsement, so that way you'll be covered in both states. Okay.
And then lastly, since Louisiana requires the 5-year period to keep records, is that probably a good suggestion? Not, you know, not to say it definitely, but to have the policy in place, the ERP, for 5 years.
Again, yeah, if you've done recent transactions, that's a good idea to have it for the 5 years. But, you know, for our purposes, you don't have to. But again, I would, just as a precaution, because these claims can come up years after the fact. It just depends how many transactions you've done and what you're comfortable with.
All right, that was it. Then we can now we can go to Christine if you'd like, Ron.
Okay.
So I want to introduce Christine. Her name is Christine Campbell. She is the Senior Claims Specialist at REAC. She handles all aspects of complex claims against real estate professionals. Before joining REAC, Christine practiced law as a litigator for 19 years. She handles insurance declaratory judgment actions, insurance coverage opinions, personal injury and tort defense, and creditors' rights defense. She was a licensed insurance adjuster during law school, working by day in the health insurance subrogation industry and attending law school in the evenings. I'm going to mess this up, but Louis Brandeis School of Law at the University of Louisville. She got her Juris Doctorate. The Bellarmine College, she received her BA in psychology. And she is licensed to practice law in Kentucky, Indiana, and West Virginia, and in the federal courts of the Eastern and Western districts of Kentucky, the Northern and Southern districts of Indiana, and the Southern District of West Virginia, and is also a licensed insurance adjuster. So please join me in welcoming Ms. Christine Campbell.
Hi, everyone. I hope you can hear me okay. Got you all on my tablet so that I can look at the policy on my screen. Just real quick to clarify with respect to the extended reporting period endorsement that Ron talked about. What you all should understand is that Continental is only obligated to sell that to you once. So if you buy just 1 year of the ERP, and then you want to buy more years, you may not be able to. I'm not saying you definitely won't be able to, but the mandate is only to sell it one time. So you can buy that for 1, 2, 3, or 5 years, but not 4, because we don't like that. And the premium for the 5 year is 300% of the expiring premium plus the cost of any applicable endorsement premiums. So you would have to contact us to get a quote for that. The 300% of the expiring premium for 5 years is $426. So just a point of clarification. I just want to touch base a little bit about some trends that we've seen in claims, so that you all sort of know what to look for, and maybe also talk a little bit about some risk management tips. So I have my list garnered from my other adjuster friends. One of the things on the list is properties that might be on septic, but they're identified as sewer, or weirdly vice versa, although much less often. So just be aware that sometimes people don't know. They might get a bill from some local, sewer company like we do here, and not realize that they actually have a septic system. So, that's just something to be aware of, to not guess. If you're familiar with a neighborhood and you think they all have sewer, they may not. So make sure that you're asking your sellers and getting clarification on which one of those that they have. Some of the biggest claims that we see are going to be seller non-disclosure claims. Typically what we see is the seller failed to disclose X condition, and so did the listing agent, or so did the listing brokerage. A lot of times those claims are not as provable without some kind of smoking gun from the agent. In Louisiana, we get a lot of those with respect to mold and prior water intrusion and termites, which I'm sure is no surprise to any of you. So those are ones to look out for, and make sure that you're asking your sellers, especially with the hurricanes and the flooding, make sure that did they have water intrusion? Did they file insurance claims about that? Was there mold? Do they have documentation about any remediation of mold that occurred? Bear in mind that in the policy, mold-related claims are typically going to fall into the environmental claim sublimit, and that is only $10,000 per claim. So it is a very limited coverage. So it's very important to do what you can to minimize the risk of a non-disclosure of mold claim. I know Ron touched on the fact that property damage and bodily injury are not covered under E&O policies. Bodily injury is going to include people alleging that they have health problems due to mold. Property damage is going to include damage to property from mold, such as, wood rot, joists that are now spongy because they've been, they have gross moldy things growing on them. Also with termites, the damage that the termites cause to the structure is not covered. The environmental claim sublimit is an exception to a property damage claim related to mold, but not to a bodily injury claim. And there is no exception for termite damage. So one way to, prevent or minimize termite damage claims is certainly ask your sellers, have you had treatment? Do you have documentation of that? What company did you use? I have actually had a claim where termites were not disclosed. The buyers found out about them, called the first termite company that appeared in their Google search, and that person came to the house and said, "Oh, you bought the termite house." And it was very obvious that seller had treatment and didn't disclose that. On the buyer side, if termites are a risk, and I feel like that's the entire state of Louisiana, make sure you're telling your buyers to get a termite inspection. Sort of a segue into risk management, conversations that you're having with your sellers or with your buyers about things that are important to your duties as an agent. Make sure you're confirming those in writing. That is one of the absolute best things that you can do to protect yourself, not from getting a claim, but from being able to defend yourself if there is a claim. You don't want to be left with, well, we talked about it on the phone and my buyer didn't want a termite inspection. Because the minute your buyer finds termites, yeah, they did. That whole conversation was about a termite inspection. And they're going to have a completely different recollection of that phone call than you're going to have. But if you send them a quick email or even just a quick text, just want to confirm we talked about a termite inspection and you didn't want one. If I'm wrong, let me know. And now you've not only documented that call in writing at the same time that you had it, so your memory of it is still good, but you've also sort of shifted the burden back onto that buyer to tell you that you're wrong. And so, let's say 2 years from now, you're in front of a jury and the buyer saying, no, we never talked about termite inspections. Your text message confirming that conversation is going to go a long way to convincing a jury to believe your version of events, over your buyers. So do document things, conversations about inspections, anything about waivers. If you've expressly asked your seller, have you ever treated for termites? Do you have termites? Have you ever had flood damage? And they say no, confirm that in writing so that you have that document and you can use it to defend yourself. One thing to be aware of that is going on kind of nationwide are these vacant land scams, where people pretend like they own a parcel of vacant land. Normally, that parcel of land will be unencumbered, so it doesn't have a mortgage or anything else recorded against it. This fraudulent person will contact someone to list the property. They won't meet with you in person. You will never have a face-to-face with them. Everything's going to be electronic. And they'll represent that they own this land and get you to sell it for them, and they're not really the owner. And so later on, when the buyers who completely have no idea this happened go to build on the property or something, inevitably someone catches them, they go to the owner, and now there's a problem. That vacant land scam is a form of conversion. It's a form of theft of property. So it's not covered under your E&O. So you do want to make sure that you're protecting yourself against those types of scams. One thing that you can do is have a red flag pop up in your mind when you're talking about unencumbered vacant land and a person who will not come to your office or won't, do a FaceTime with you. There's someone that you're never going to see in person. But another thing you can do is pull the public record about the actual owner and just send them a letter. Hey, great. I'm so excited. We're going to work together to sell your property located at this address. And that way, and keep a copy of the letter and the envelope in your file. Hopefully that gets to the owner, who then calls you and says, wait a minute, I'm not selling my land. But even if it doesn't, you'll need that to defend yourself, to show that you exercised reasonable care to try not to be, part of a vacant land scam. Similarly, if something needs to be notarized, don't let the person send you something notarized. Send a notary to them instead, because the person that they're going to have notarize their signature is not actually going to be a notary. So just some things to bear in mind about that. Also bear in mind that wetlands continue to be an issue. The law recently was amended a bit by the Supreme Court in an opinion a few years ago, where wetlands federally are things that are attached to known waterways. That may not be the case for any kind of local or city or county definitions or ordinances. So if wetlands are an issue, it may be that you check both the federal wetlands databases that are available online, but also check with the county or the city and their records, because they may reflect something different. And that's going to, potentially affect the use of that land. And then the last thing I wanted to mention was property management. We get our fair share of property management claims. Bear in mind that not everything that a property manager does has to be licensed, but only people who are licensed are going to have E&O coverage. So someone doing property management work without a license may not be violating the license laws, but they're also not going to have any E&O coverage. You can only buy this coverage if you have an active real estate license, and your individual policy will not extend to someone performing property management activities without a license. Well, it won't extend to somebody with a license either, but it definitely won't extend to someone without an active license. Any extension to non-licensed persons is limited to support and clerical staff, such as, you know, a runner or a secretary or an assistant, but not anyone doing any substantive property management duties. So that's my spiel. On the buyer side, most of our claims are going to relate to, you know, bad advice, failure to, you know, point things out that might be wrong in a contract. I did have one where a person did an offer and they buried language in a place in the contract where it isn't usually done in Louisiana. And so the agent missed it. So make sure that you're reading when you get a counter offer. Make sure you're reading through all of it and looking for an insertion in a weird place. And most of our other buyer agent claims are going to be, you know, failure to recommend an inspection, based a lot of times off of what a home inspector finds, not recommending, you know, a roofer or someone, you know, look into something further. Those are the biggest ones. And also the usage of the property. A lot of times people want to, you know, buy something that they can rent as an Airbnb or put another structure on for their mother-in-law to live in. That's not always allowed. So make sure you're telling your buyers that you're not an expert in property use and zoning and that they need to consult with the relevant authorities, you know, be that city or county or parish. And make sure you're documenting those conversations in writing to protect yourself later. And that's my spiel, because I know that you all are probably tired of talking about insurance and it's almost 4 o'clock
And
or
we've
5
got
o'clock.
couple quick comments before I get Summer Mire, the executive director of the commission, to come on.
Sure.
Can that EPR coverage you spoke of, Ron, can you extend it beyond 5 years? Renew it after 5 years?
Currently for us, we are limited to 5 years with Continental Casualty. We have asked about further extensions because we get that question frequently. But right now we're limited to 5 years.
Okay. And then another, just a reminder to everyone, in the wood destroying insect reports, they do have a warranty on that second page, but most of the realtors forget to point that out to their buyers. And then have y'all had any experiences with when phone calls are recorded in other states or Louisiana used in court? Does that help if they're done properly by the law and recording those conversations used in a court of law to help protect the licensee?
It certainly doesn't hurt. You know, any documentation or proof that you have that is contemporaneous with the conversation is going to help you defend yourself, because realistically what happens is, you know, you are in a transaction and it closes on January 1st and they discover something bad about it in April. And then they send you a letter in June. And then they sue you in December. And then you finally, you know, sit for your first deposition the following June, maybe even later. And now you're trying to remember a conversation you had 18 months ago. I don't know about you, but I can't remember what I wore to work yesterday, much less what I talked with anybody about on the phone 18 months ago. So, and now you've got, you know, you have an interest in your version of events being believed by a jury. And the person who's suing you has an interest in their version of events being believed by the jury. So the jurors, if it ever gets to trial, which may be more than 2 years after this transaction, you know, if it ever gets to trial, the jury's going to think that both people testifying have a motive to testify in their own favor and not be truthful. So if you can pull out a text message, or if it's allowed, a recording that happened at or near the time of the conversation, that's almost certainly going to tip a jury in favor of your version, because that's more credible than someone's bad memory, you know, 1, 2, 3 years later, when now they have an interest in being right. So, you know, what you need doesn't have to be super detailed. You don't have to write them, you know, a Shakespearean play about the conversation, but just a quick, you know, something that verifies that the conversation happened what the decision was, and then invites the other person to tell you if you got it wrong, will go a long way in not only jogging your own memory, but making other people believe that your version of events is the accurate one.
All right, that wraps up all of our questions. Carrie.
Yay. Well, thank you for having us.
Thank you, Christine. That was quite entertaining and interesting. I really enjoyed that.
Well, no one has ever said that to me before about insurance, so thank you.
Well, we always need to know how to keep ourselves out of a pickle. And I think you gave some really, really good points on that. I actually took half a page of notes. So,
Well, and to reiterate what Ron said, if you have questions, call us. We're available during business hours and we're happy to talk to you.
thank you.
All right. Thanks, everyone.
All right. Our next speaker is Miss Summer Mire. She is the Executive Director of the Louisiana Real Estate Commission, and she is going to give us, I believe, a property management update.
Hi, yes, thank you. I appreciate y'all having me today. I'll try to keep it brief. I know we're getting to close to the 5 o'clock hour here. I do want to cover two things first before I kind of go into the property management part. 2025 is the year that the Louisiana Real Estate Commission and Louisiana Realtors gets our joint task force together to go over the mandatory purchase agreement as well as our residential property disclosure forms. So we will be sending out some communication. It should be going out Friday to notify all of the licensees of our comment period. It's going to be open for about a month. So if you have any comments, any suggestions, any changes that you would like to see on either of those forms, you can get those to us. It'll be up on our website. There will be a link on the main page to where you can click into it, and then it has a form you can fill out. Louisiana Realtors will also be releasing something similar as well. We will take both of those comments, join those up together, and then we usually meet in June here at the commission with our task force. The commission will usually review those changes or those proposed changes, generally like around July, August, and then the changes won't be mandatory until January 1 of 2026. So if you have anything that you want to see changed on those two forms, please get those comments in so we can take a look at those. Another thing to note is that our annual CE audit will be going out this next week. We have about a little over 800 licensees this year that have not completed their CE for 2024 after the renewal or before the renewal of their license. This is actually down from last year. We had about 1,400 licensees last year. So we are getting more people into compliance, but 800 is still a big number. So if your licensees get this letter, please let them know, because you as a broker will also receive a copy of the letter via email. But if you get a copy of this letter, or your licensees get a copy of it, if they have their certificates in possession that show that they completed that education, there will be an email address that they can send the copy of those certificates to so that it can clear up that audit. If not, if they didn't get the education, they will be required to get the education as well as pay a fine to go with that continuing education audit. So there will be an email address. They can contact our compliance staff if they have any questions, but please do cover that with your licensees as well. That will be going out. So kind of in line with what we were talking about with Rice Errors and Emissions Insurance, we have seen an uptick in property management complaints. One of the biggest things that we are seeing is the misuse of property management funds. Oftentimes we have licensees that are practicing property management and not under the supervision of their sponsoring broker. One of our biggest complaints right now that we have, one of our biggest cases that we're working on, is missing thousands of dollars from the property management accounts because the broker had no idea what was going on. They're doing this on their own, on the side. It's not being put into the property management or the supervising broker's accounts. So they have no recollection, or they have no record of any of this property management that is taking place. So some of the things that we need to look for, or you need to look for as brokers and talk to your licensees, if they are doing any type of property management, again, of course, it has to go through the sponsoring broker. You need to have 2 accounts set up. You have to have your rental trust account. You have to have a security deposit trust account. A lot of brokers don't realize that they're supposed to do that. And so funds end up getting commingled because they're not putting those deposits or those rental payments into the correct accounts. Failure to properly and timely return deposits. We have, again, property management or failure to properly manage client funds. So please, if you're having your broker meetings, please talk to your licensees, let them know property management complaints are up on the rise. You have to be doing this through your sponsoring broker. Just a couple of other things. The 2025 mandatory course this year is navigating the new normal. That's on our buyer brokerage agreements. That was a course that was developed by Lynn Madison for the Real Estate Commission. It's been ongoing, of course, since the beginning of the year, but please note that that is the 2025 mandatory course this year. All CE must be completed by December 31st of each year. So if you are renewing your license on September 1st when it opens, you still have through December 31st to get that education taken. So I think that's been a little bit of a source of confusion for licensees, but you do have through December 31st to complete that CE. And the biggest thing that we want to stress, if you could stress to your licensees, I know that I received multiple waiver requests on license renewals because they did not get their license renewal, but it's because they didn't update their contact information with the commission. So you need to be sure that if you are changing any email address, any home personal mailing address, you need to do that within 10 days. It's not going to be an excuse that, oh, I didn't get the email that you sent out, because it is your responsibility as a licensee to make sure that you are updating that information with the Real Estate Commission. So please stress that again, if that can be done through the portal. A lot of times licensees will change brokerage companies and forget that they're no longer with, let's just say, Keller Williams. They have moved to Compass Real Estate. They'll forget that they need to update that email address with the commission. So please, again, stress that with your licensees when you have any meetings. So I know I went through all that really fast. I'd be happy to answer any questions. I wanted to make sure that we got through those points and get you out of here in a timely manner, but I'd be happy to answer any questions that you might have.
Is there any additional penalty if someone renews their license and agrees they will take the CE? Is there still a fine, I guess?
So you have through December 31st to take the CE for your license. If you, let's say, so if you didn't take it in 2024 and you're taking it in 2025 for that 24 renewal, you do have a $325 fine. Is that what they're asking?
Did that answer?
So if you're completing it late, if you get caught into the audit, you're going to get a letter from us that basically says, hey, we don't have any record of your CE for 2024. It's now 2025. You will be required to take whatever missing education there is. So let's just say you took your 8 hours of electives, but you didn't take the 4-hour mandatory. You'd be required to make up that 4-hour mandatory, give us proof that you completed it. If it's your first offense, it's a $325 fine that you pay. It does go up for the second and a third offense. Second offense, I believe, is $575, and a third offense is $1,525. So it's a severe penalty because the commission does, education is important. So it does need to be taken each year and taken seriously. Any other questions?
All right. I don't see any more. Nobody's hands up. Well, thank you, Summer. That was a great information also.
Thank you.
I think the last speaker we have is our very own Norman Morris. He's going to give us a legislative succession overview and talk about the Broker Summit coming up this year. Norman may be busy. There you go.
Okay, I'm going to take 1 minute. I'm going to be quick because I know everybody's ready to get out. As y'all know, the legislative session begins on April 14th. It is a fiscal session where a lot of tax matters and will be, debated, voted on, and each legislator has up to 5 bills they can file of any subject matter. So we're going to bring our bill review group together in the next week and a half, review all the bills that are pertinent to the real estate industry, take positions on those bills, either support, against, or monitor those bills as it goes through the process. Certainly, we're going to support those bills that support the real estate industry and makes it easier for your consumers to freely buy and sell all types of real estate. And certainly, we're going to fight against any taxes they may look to place on your services or any other thing that would be detrimental to the real estate industry moving forward. So we're going to be heavily involved, and we may lean on you to make some calls to legislators, depending on the issues. There have only been about 300 bills that have been dropped so far. There'll be some more to come in the next 2 weeks and beyond. But know that we're going to be there for you to make sure the industry stays healthy and successful. And then you can continue to make money and represent your clients like you're doing today. And then I think Lori has if you'll put on your calendars, I think we have it to throw up on the screen. Our Broker Summit is going to be held in August, and we wanted to throw a save the date. It's going to be August 27th and 28th at the Omni Houston Galleria. Terry Watson will be teaching a couple CRB courses. Great time to learn about all of that, as well as networking with your former brokers. We're taking all the brokers to a Houston Astros game. You'll get to network with brokers that you may not have met before and learn from them some of the things that they've implemented in their offices. And it's for broker owners and broker managers. So I encourage you. We had one, we've done one the last 2 years, and they've just been real excellent events. And we try to make it short, get you in on one day and get you out very quickly, because we know your time is very valuable. So put that on your calendar. More information to come and registrations, but it's a great day and a half in Houston to learn more about what you do on a daily basis with one of the best instructors in the country. So also, Louisiana Realtors will be going to the commission later this month to get a commercial mandatory alternative to the regular mandatory that Summer just mentioned to you. It is a commercial appraisal course that's going to teach commercial practitioners how the ins and outs of how a commercial appraisal on all different types of properties, how it's done, what you need to look for, what your clients need to know if in the commercial arena about that appraisal and the process that it goes through. It's a great 4-hour course, and it's going to be taught by a great appraiser out of the New Orleans area, Art Schwartz and Mosaic. And we'll be trying to get that approved at the Real Estate Commission April the 24th. And if it is approved there, we'll start rolling it out in about 6 or 7 different area markets around the state between June and the end of the year. So, Carrie, that's all the update I have. And if you'd like to close us out and this, what I think, hopefully y'all got a lot out of today's session.
Thank you, Norman. I do. I hope y'all all got a lot out of this today, and take it forward, bring it out, bring it back to your agents, bring it back to other brokers that may not have attended today. Norman, these are recorded, right? So they can go back to the site and watch them and share them. So just share it and make sure you get ready for the next one coming up in, I'm assuming,
probably in about 2-3 months.
So thank y'all for coming, and hope you enjoyed it. And again, if you have anything that you want us to talk about, please send it to info@larealtors.org.
The recording will be under broker resources at the top of the page. Just click on Realtors and then broker resources, and we'll post the recording there.
Thank y'all.
Thank you.